Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zacks Top Stock Picks. I am Brian Boland, and I'm joined by the birthday boy, David Bartosiak, who turns 40 today. Happy birthday, Dave.
Well, thanks. I never thought I'd make it, but here I am.
Yeah, unbelievable. I thought for sure 39 would have been the limit for you, but look at you, surprising to the upside. And that's just a great sign for all of us. So let's jump right into it. I'm going to go first. I'm going to save the best for last. Dave's up second. My stock for this week is Kirby, and the ticker is KEX. It's right there. It's a Zacks rank #1 strong buy. C for growth, D for value. This is a shipping a name that, will transport liquids, oils, things like that, barges. That's the general idea here for Kirby. Let's go to the numbers that we normally look at. We've got a great history of beating the number. We've got an 8% beat, 4%, followed up by another 4%, and most recently, a 14% beat. So average annual positive surprise of 8%. Let's take a look at what the estimates are doing. Now, normally, with a Zacks rank #1, we'd see earnings estimates moving up, but from here, we see $1.06 crimping into $1.02 for this quarter, but we're getting some of those pennies back next quarter, $1.03 running up to $1.06. And the full year is what we should really be focused on when we're looking at the Zacks rank, and we see it moving from 358 to 376. Then from 476 to 504 next year. So a good look for the estimates. Let's take just a quick look at our sales numbers. And we can see this year we're looking at 11% top line growth. Next year coming in just about to 3%. So growth slowing a little bit there. But let's take a look now at the financials. And we're seeing the stock trading at a 22 times multiple, which is, a little bit high for a company that is producing, 11% top line growth. The price to book is going to keep value investors here in this name because 1.6 times is pretty good. 1.65 times sales is all right. It gives us, that every dollar of sales is worth something here. And we see margins moving quite aggressively higher, 4.5% to 5.1% to 5.9%. Revenue growth with margin expansion means earnings are moving up, and then you can get a higher earnings multiple thereafter. So let's take a quick look at the chart here. Here we have our pandemic. The world's going to end. And then a nice slow grind because this is a steady, solid business. Now, the thing that I'm going to highlight on this chart is the distance between the earnings estimate lines. We can see that it's nice and strong. So that tells me that there's good earnings growth happening here. And when we see that, we can see what happens here. The stock has moved up steadily. Chart looks like this thing is headed for $90. So let's keep this one on your screen for this week. All right, let's throw this one back over to the birthday boy, David Bartosiak.
All right, thanks, Brian. Here I have e.l.f. Beauty. I know you know what beauty means just by looking at you, but the e.l.f. stands for ears, lips, and face. It's not some kind of J.R.R. Tolkien style beauty. Let's take a look at Zacks.com and see why I like it. So first and foremost, Zacks rank #1 strong buy. Check out the value style score of F, but we don't really care about that right now. Look at the growth. An A for growth, an A for momentum. Help it round out with a VGM composite score of C. Now, the cosmetics industry is in the bottom 19% of our Zacks industry rank. That just means that the rest of e.l.f. Beauty's peers aren't doing as well as this company is. Now, a couple of things I want to point out. First, look at this big EPS beat last quarter, almost 90% above expectations. So that's a good thing. However, coming into this quarter, these numbers have been dropping coming into this quarter, but it's okay. And I'm gonna show you why in a second. Let's take a look at these numbers here on the sales side. 64% growth for this year, 17% for next year. Those are a couple of big numbers. Translated over to the EPS side, 42% this year and 16.5% next year. But look at the evolution of this. So over the course of the last 90 days, even forget that, just look at 60 days ago. $1.83 to 237 for the current year, 220 to 276 for next year. So those are some really good growth numbers that we're seeing. We're seeing estimates move in the right direction. I can highlight this a lot easier by taking a look at our price consensus and EPS surprise chart on Zacks.com. Probably the single greatest chart in the history of charts, because you can glean so much information from just this one place. So the green arrows here are earnings beats. The red arrow, that's right, singular, is the lone earnings miss that this stock has had dating back the last 5 years. So a ton of big beats for the company. So that means management does a good job of reeling in those expectations and then under-promising and over-delivering. Now, these multicolored lines represent the evolution of our Zacks consensus estimates over time. And here you're seeing a good thing. We aren't starting lower all the time, and then it creeps up all year. It just creeps on up, which is fantastic to see. Something that Bolin pointed out in his segment is this gap between. Now, it doesn't look as dramatic here because the stock price has just been going so high. So we can actually use these little arrows to zoom on in, and then you can kick it over to the right and shape this up a little bit better. And here you can see that you have this year-over-year growth number and this growth number continuing higher on the EPS side. That corresponds to this left y-axis. So you can see earnings have been pushing up in the right direction as the stock has sort of been skyrocketing higher. But what's happened recently? Stock topped out near $1.40. It has really reeled in to 106 here. So you're getting a stock where earnings estimates are moving in the positive direction, but the stock has sold off considerably off the highs. That's part of the reason why I like it. And of course, it is a Zacks rank #1 strong buy. So there you have it. That's why I'm going with e.l.f. Beauty as my pick. You heard from Bolin all about his pick. Be sure to check out Zacks.com/promo for this week's big deal that we've got going on for you. So for Bolin and I and everybody else here at Zacks, I want to say thank you, and we'll catch you all next week.